Hello and welcome to our first edition of our regular market updates for 2022. The defining feature of the last month has been inflation. It's something you'll hear a lot about in 2022. As well, with central banks around the world shifting gears to address rising prices. Both the ECB and the Fed have significantly scaled back their asset purchase programs, and the UK and Norway have raised interest rates. Many central banks in emerging economies, from Chile to Russia, have also raised their rates. Inflation has quickly become a central political issue, and as we anticipated, the tightening of monetary policy is likely to come more swiftly than previously expected. The Federal Reserve is considering selling some of the assets purchased over the last year and a half, while most analysts now think we could see 4 rate increases this year. In short, for central banks, the time has come to signal to the market that inflation is an important issue. It's also important to the Fed that it divorces monetary policy from the pandemic to some extent. This is to signal that, in the event of further complications on the healthcare side, the tightening of monetary policy must go ahead. We do, however, believe that this narrative is consistent with the market's expectations. We also expect central banks to proceed with caution. Meanwhile, some consequences of high inflation are beginning to be seen on the market. The yield on the 10-year Treasury bond rose after remaining stable for some time. If the outlook for price growth is rising, rates are expected to rise, and normally the rate at which governments and companies borrow money must also rise accordingly. A rise in rates can have a negative impact on equity valuation. This is particularly true of higher valued stocks and growth stocks. It is no coincidence that, at the start of 2022, we began to see some turbulence on the Nasdaq. From a wealth management point of view, the question to answer is where we should direct the stock rotation. We still believe that there are equity sectors and geographies with plenty of room for growth. We'll take a look at value stocks and emerging markets. These are all the areas for us to assess to see if there are opportunities worth exploring and factoring into our portfolios. Finally, just as we do every year, our team is working on updating our investment strategy. As usual, we'll distribute the document to all of our investors and hold an event in February to discuss it. Broadly speaking, the document is where we estimate the long-term return prospects of major asset classes. This year, we'll focus on sustainable growth, not only from an environmental point of view, but also from a financial, economical, and social perspective. The global economy is changing. Both businesses and governments are having to navigate issues like inflation, supply chain problems, and labour shortages. The good news is that we believe that these issues can be solved. Markets have shown a remarkable degree of adaptability and resilience in the recent years. Investing for the long term remains the best solution, especially with the current challenges. Our job, as usual, is to help you navigate this period with confidence. Therefore, we believe it's essential to share our perspective with you, and we look forward to doing so in the coming weeks.